Hello class and welcome to Financial Accounting Theory and Analysis. This is the first chapter. We're going to do a brief overview of the development of accounting theory. So what is theory? So Webster defines it as systematically organized knowledge applicable in a relatively wide variety of circumstances, a system of assumptions, accepted principles, and rules of procedures to analyze, predict, or otherwise explain the nature of behavior of a specified set of phenomena. And there's two major types. We've got normative theory and positive theory. Normative theory focuses on what should be done, while positive is what is already being done. And why is the development of general theory of accounting important? Well, we have to allocate scarce resources, and in order to do so, we need some sort of theory, right? We need a way to do that. And does the use of theory help individuals make better decisions? Well, there's various theories of accounting, and we'll discuss that further in Chapter 4. Early history of accounting theory. So early accounting tools included clay tokens found in Middle Eastern archaeological sites. These tokens represented inventory items, demonstrating early systems for tracking resources and efforts. Examples of these are like the papyri, highlighting the use of accounting in managing construction, agriculture, and business operations in ancient societies. And that is here, right? So we manage construction projects. Italians pursued the trade and commerce, and they needed records to do so. And Fra Luca Pacioli was a pioneer of that work. So the early history of accounting, the evolution of joint ventures into ongoing businesses caused the need for external financial reporting. By the end of the 19th century, commerce was expanding and the Industrial Revolution had arrived in the US. So widespread speculation in the securities markets, watered stocks, and large monopolies that controlled segments of the US economy resulted in the establishment of the progressive movement. A report reviewing these practices issued in 1900 suggested that an independent public accounting profession should be established to curtail observed corporate abuses. So, what is capital maintenance? It changed from maintaining invested capital to maintaining physical productive capacity to maintaining real capital. So the accounting profession was also evolving at that time, and the American Institute of Accountants and the American Association of University Instructors in Accounting were formed. So after World War I, public perception was that business had reformed and external regulation was no longer necessary. So the accountant's role had to change from the protector of third parties to the protector of business interests. And critics of the current accounting practices suggested that accountants abdicated the stewardship role, placed too much emphasis on the needs of management, and permitted too much flexibility in financial reporting. And possibly as a result, not a direct result, but a contributing factor, in 1929 the stock market crashed, the Great Depression ensued, and the possibility of governmental intervention in the corporate sector loomed. So due to fear of government intervention, attempts at self-reform were instituted. There was meetings between the stock exchange and the American Institute of Accountants, as well as the AAA. And this resulted in creation of the SEC, right? The Securities and Exchange Commission, as well as the Securities Act of 1933 and the Securities Exchange Act of 1934. So the Great Depression spurred this creation, and it highlighted the needs for robust financial reporting. Initial regulatory frameworks allowed the private sector to set principles accumulating in the authoritative bodies like the AICPA. So from 1936 to 1938, the SEC had an internal debate about whether it should develop accounting standards. But in 1938, Accounting Series Release ASR number 4 came out. So the SEC allowed private sector to set those principles, And reports filed with the SEC must be prepared in accordance with the accounting principles that have substantial authoritative support. A statement of accounting principles, because accounting profession did not think it had time to develop theoretical framework of accounting. They said, do what you think is best. And the criticism of these led to the establishment of the FASB, the Financial Accounting Standards Board. So American Institute of Certified Public Accountants was formed in 1936, and they had influence on the development of accounting theory. So they had a committee on accounting procedure, an accounting principles board, as well as FASB, Financial Accounting Standards Board. So each had issued pronouncements and have become primary source of today's generally accepted accounting principles. What about the Committee on Accounting Procedure? This was also formed in 1936, made up of professional accountants, and they released accounting research bulletins. They did not dictate mandatory practice, and they received authority only from general acceptance. ARBs consolidated in 1953. So we have Accounting Terminology Bulletin Number 1, Review and Resume, and ARB 43, as well as ARBs 44 through 55, published in 1953 through 59. FASB Accounting Standards Codification is discussed in later chapters, includes recommendations of these bulletins that have not been superseded. So the Accounting Principles Board, they were criticized by CAP. So methods of formulating accounting principles didn't arise from research based on theory, and acting in piecemeal fashion and issuing inconsistent standards were their main criticizations. This resulted in the formation of the Accounting Principles Board, and they formed APB opinions. Controversy over accounting for the investment tax credit started in 1961, and they resulted in APB opinions 2 and 4 as well as Rule 203. So what were the criticisms of the APB? So the independence of members. So members had full-time responsibility elsewhere that could influence their views. Structure. The Big Eight automatically each were awarded one member, and usually 5 or 6 other public accountants were on board. And their response time was slow. So part-time members were not available to investigate and resolve emergency issues in a timely manner. So this resulted in the Financial Accounting Standards Board, FASB. Due to the growing criticism of the APB, the Board of Directors of the AICPA appointed 2 committees, the Wheat and the True Blood committees. So the Wheat Committee worked on how to establish accounting principles, and the True Blood Committee worked on objectives of financial statements. And thus the FASB was established. What did that look like? So we had electors who appointed a board of trustees that governed the Financial Accounting Foundation, that appointed and funded the Financial Accounting Standards Advisory Committee, which was made up of approximately 20 members. And they made up the Financial Accounting Standards Board, 7 members. And they were also appointed and funded by the Financial Accounting Foundation. And those 7 members were admin and research staff. They appointed the task force of the Standards Board, and that task force worked directly with the FASB. So their mission was to establish standards, and they had different types of pronouncements: statements of financial accounting concepts, statements of financial accounting standards, interpretations, and technical bulletins. They worked on emerging issues like lack of so they wanted to make up for lack of timely guidance. They had problems though, like standards overload. There was too many standards. So how do we pare this down? Standard setting as a political process. So some users found that the best way to influence formation of accounting standards is to attempt to influence standard setters. So examples of this were SFAS numbers 123 and 123R. And there were economic consequences to each of the standards that they set out. So over time, this created gap. So We had the evolution of phrase, so changing wording of auditor's certificate brought about by meetings between the New York Stock Exchange and the American Institute of Accountants. The APB's definition present fairly in conformity with generally accepted accounting principles. And the Auditing Standards Executive Committee definition had no singular reference source, said that no singular reference source exists for all principles and makes general acceptance of specific principles difficult. So SAS 69 was basically put in order to determine acceptance of a specific principle, and it recognized that, hey, it's difficult to do so. So here's the hierarchy of GAAP. So we've got 4 levels. So FASB Codification Project reduced this to 2 levels, authoritative and non-authoritative. So what did this look like? There was hundreds of accounting standards promulgated by several different accounting standard setters. Accounting standards had evolved to the point that professionals could not keep up. For example, using the previously existing structure, an individual needed to review existing FASB, EITF, AICPA, and SEC literature to resolve even a relatively simple issue. As a result, it was easy to inadvertently overlook relevant guidance. So in September 2004, the FAF trustees approved funding for FASB's codification and retrieval project. So the FASB Accounting Standards Codification was born. June 2009, FASB announced codification would be single source of all non-governmental U.S. GAAP effective September 15, 2009. And it involved the following steps. Restructure all U.S. GAAP literature by topic into a single authoritative codification, and modify the standard setting process to focus on updating the codification. So what reasons did we have for this? So researching multiple authoritative sources complicated the research process. We can't research 4 different sources and figure out what to do. So FASB ASC contains all current authoritative accounting literature. If guidance is not specified, first source to consider is accounting principles for similar issue with a source of authoritative GAAP, and non-authoritative guidance from other sources may be considered if similar transactions aren't discovered in GAAP. So what are the roles of ethics in accounting? The public accountant is a watchdog, right? What is the basic conflict of interest facing public accountants? Well, balancing their watchdog role with client relationships. Scandals like Enron highlighted the consequences of comprised ethics, emphasizing the importance of corporate governance reforms like the Sarbanes-Oxley Act. So what happened in Enron? Enron and the accounting scandal. So special purpose entities now themed variable interest entities. They had access to capital and hedge risk, and this allowed the company to increase financial leverage and return on assets without reporting debt on the balance sheet. So losses were kept off Enron's books. Enron eventually filed for bankruptcy, and the stock became virtually worthless. What other events of the early 2000s? So historically, accounting had been considered a highly trustworthy profession, but client relationships changed as information technology advisory services grew in the late 70s and early 80s. The audit function evolved into a loss leader offered in conjunction with much more lucrative consulting engagements. So accounting firms are not immune to profit motive. So firms began to compete more aggressively on price for audit engagements, and the result was less tests that helped detect the likelihood of fraud. So 2 major changes in the accounting profession have taken place in the wake of the accounting scandals. Arthur Andersen was formerly one of the big 5 audit firms, is no longer in business. And the Sarbanes-Oxley Act. So President Bush signed this into law in 2002, and it imposed a number of corporate governance rules on publicly traded companies, which are discussed later in the book in Chapter 17. In addition to this, outside of the United States, we have international accounting standards. The harmonization of accounting standards is critical for global financial reporting, and the International Accounting Standards Board works to improve and unify regulations worldwide. They have 41 statements of accounting standards and 17 of financial reporting standards to date. So thank you so much for taking this journey with me in Chapter 1. If you have any questions, please reach out. Have a blessed day, and we'll see you again soon.